Good morning friends and welcome to the pre-market view. US markets were flat as we can see that there was not much of movement post the decision of the Fed to taper to the tune of about $10 billion from next couple of months. But what we've seen is that the gold and most of the other precious metals have actually corrected. In fact, gold is quoting at about 3-year low and the dollar index has shot up to almost about 81. And more importantly, the 10-year bond yields in US have actually spiked up to about 2.92. So in the last about 2.5-3 months, we've seen the 10-year bond yields spike up from about 2.6 to almost about 2.9, which is definitely a bit of a concern. European markets too were up about 1.5 to almost about 1.75% as they were reacting to the Fed decision because it was taken late night yesterday. And Asian markets, there's some amount of negativity as we can see that the Hang Seng is down almost about 0.4% and Nikkei is down 0.5%, and SGX Nifty is also suggesting that we are going to open down about 20 to about 22 odd points. Back home friends, our markets also gave up most of the strength of the fact that there was no rate hike which the market would widely expecting, but we had seen a sharp sell-off in the banking names. And overall, looking at the way the global markets are, we expect a flattish kind of open and the bias would be a bit negative. Though in terms of flows, FIs were net bias in the cash market to the tune of about 2272 crore. Domestic institutions were sellers to the tune of 42 crore, and in the index futures, we have seen selling by the FIs to the tune of about 570 odd crore. On that note, let me invite Sadhana to take us through important F&O cues and ideas that we can have from the F&O side.
Good morning friends, let's have a view on derivatives. A positive step taken by Federal Reserve. We have seen a gap up opening in Nifty, but due to sustaining sell-off across the sectors, Nifty came off from day's high and closed the session in red with a significant loss of more than 1%. And along with that, we have seen that profits have taken away by market participants as around 21.72 lakh shares were reduced in open interest, and we have seen a significant decrease in the cost of carry. And we have on the options front, we have seen that call option has added more number of shares than put option, due to which PCR has come down from 0.99 to 0.95, which is clearly visible in the options activity. As we can see, 6,300 strike call option stands with highest number of shares in open interest, and whereas on put option we have seen that 6,000 and 6,100 put option has seen a good activity. So overall we may see 6,100 might act as a good support on closing basis, and intraday support would be 6,120, resistance is 6,220, and in yesterday's trade we have seen that FIs were net sellers. Overall our bias for the market is negative as we are trading below our weekly VWAP. From intraday perspective, one can go short on Tata Power with a stop loss of 91.05. Thank you.
Here are the important news and events that we are tracking today. First of all, Bharti is looking at selling its Sri Lankan operations for almost about 3,000 to 3,600 crore, and this could be sold to the UAE-based Etisalat. So this could be a positive trigger for Bharti. And IDFC, which is a contender for the banking license in January, is looking at bringing down the FII stake to almost about 50% from the current about 51.3 odd percent to comply with the RBI guidelines. Cabinet has approved the scheme of interest-free loans to the Belagard sugar mills, which are going through a lot of financial stress and are not able to pay to the cane growers. So almost about 6,600 crore is what is expected to be given to the sugar companies as interest-free loans. Daiichi Sankyo has given some indications that they could support Ranbaxy in meeting with the US FDA requirements and to comply with all the other regulatory issues, which is definitely perceived to be a big positive for Ranbaxy. Escorts Limited has announced the launch of its new premium tractor series called Farm Track Executive Series, a new range of stylish looking tractors in order to strengthen its market share. Overall, tractor industry is doing extremely well, and we expect good set of numbers from Escort this quarter as well. So expect some positive action in the Escort stock in today's market. Oil and gas pack, some positive news as the India's cabinet has approved the proposal to allow the higher gas prices to the companies. So one can go long on Oil India with the stop loss of 449 and a target of about 472 to 481. ONGC one can go long with a stop loss of 269 and a target of 282 to about 287. And for Reliance also, the new gas price hike seems to have been approved, subject to it providing a bank guarantee which would be equivalent to the incremental revenue that the Reliance would get. So this is again a positive for Reliance, so one can go long there with a stop loss of 837 and a target of about 880 to about 896. And NCC has signed a detailed term sheet to sell its thermal power assets to Singapore Utility Services. So one can go long on NCC with a stop loss of 27 and a target of about 29.5. That's it from all of us, friends. Have a great weekend and see you on Monday morning.